Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
Time now for Your Money with Gem Young Wealth Advisors and Leo Daprile. And Leo is on our line here this morning. And, of course, Leo Daprile has offices. They're a family business, and they're in Canfield. And they look for people who need comprehensive risk management for their wealth and assets. And they believe that their clients want professional advice at a fair value and deliver that by leveraging the reputation of professional integrity, teamwork, and a get-it-done-right attitude the first time. From Gem Young Wealth Advisors, and here is Leo Daprile. He joins us every Tuesday. Hi, Leo. Good morning.
Good morning, Dan. How are you today?
I am well. How's our economy doing? First of all, just a general question there.
Everything's getting more and more robust, Dan. Things are opening up quicker. Everybody expected them to open up quick, but it's actually at a much faster pace than everybody was anticipating. And I think if there's any headwinds that I'm seeing, Dan, is I think we're going to have a labor shortage issue, quite frankly. I've been spending the last week just kind of nosing around, and you know me, Dan. I'm going to look around and just kind of ask the common man questions to see how businesses are doing, and everybody that I'm talking to is struggling to get workers.
Yeah, I was talking.
So I think that's going to run the risk of just slowing this recovery down.
Well, I was talking with a forklift driver last night, and he said they're looking for people everywhere, and especially in the food service and, of course, warehousing and this type of thing. But, Leo, I mean, just the short answer on this is that we kind of shot ourselves in the foot by extending unemployment benefits for as long as we did.
Dan, I couldn't agree more. And, we've talked about that when that last round of stimulus came out. I was just scratching my head. I didn't see it. I mean, anybody that's been paying any bit of attention saw how fast this was coming up. Remember what they said even back in January, Dan, and February, that airline travel may not recover to its full potential till 2022? Well, they're reporting in the Wall Street Journal this morning that they're expecting air travel this summer to be normal.
Yeah. It's amazing that how fast these things can recover. But I always worry, too, about how fast things can go south. And, What about this labor shortage? I was talking to some folks last night that do decking and things like this, and they were shocked the other day somebody was going to charge them $60 for a sheet of plywood. And I don't know what's
my gosh.
The lumber costs are just out of sight. In the long run, I think that's going to hurt the housing industry a lot.
That's going to significantly slow it down. I think where lumber prices, what's going to mitigate the increase in prices of lumber, quite frankly, is the economy opening up and people able to go spend their money on other things other than home improvements.
Yeah.
So I think that's going to be the best antidote for that demand.
Yeah. Well, I talked to Sam in church on Sunday, and I was looking forward to the seminar, but I guess we're going to have to postpone that for a little bit, right? The Social Security webinar?
Yeah, he had some logistical issues, so they had to reschedule it. And those have been incredibly popular. People really needing his guidance on that. And Sam, that's something of an area of expertise for him. He studied it for years. Being of the age where he's actually gone through it, he's one of those people that walks the walk on it, too. He really understands it.
Yeah.
So we'll get that back on track and start helping folks with their Social Security questions.
But I want to just remind folks out there that may be listening, you don't have to wait for the seminar. If, in fact, you're Social Security age or anticipating it, give Sam a call, and he'll be glad to help you. He's helped dozens of people. He's about as expert on Social Security as anybody. And if maybe you're a little bit shy about calling the Social Security Administration, you don't know if you want to take it, you don't think you're going to get the right advice, Sam will go through all of that information with you. I've talked to him on a number of programs, and he's really sharp on Social Security. His name is Sam Morocco, and you will find him at Gem Young Wealth Advisors. Just search for their number and give them a call. But Sam's postponement, we'll let him know when he's going to be back up. But don't worry about waiting to call. But we're going to move on. We have a new acronym out there. It's new to me, and it's easy to say, but SPAC, what is that?
Well, Dan, the idea for this conversation today started with Lordstown Motors because they're part of a SPAC, and everybody talked about a SPAC, but all of a sudden you notice that Lordstown Motors getting sued by a lot of law firms, and that struck me as odd because normally when a stock price goes down a lot, I've seen through the years, there's always a class action suit for a rapidly declining stock price, but the amount of law firms suing this particular SPAC caught my attention. So I went and started doing more research on SPACs overall, how they work, what's really going on to them, and why are all these lawsuits coming at all these SPACs. So a SPAC is a special purpose acquisition company, so SPAC's the acronym for that. And essentially what it is it starts out as a company that doesn't own anything. All they do is raise money, and in many cases, the initial formation of that SPAC comes from either hedge funds or private equity. Mm-hmm. Rarely is it individuals. And the conclusion I'm drawing is there's a lot of problems, quite frankly, with who's really making money with these SPACs. Okay, that was the genesis to this, and the way the SPAC is structured is once the SPAC's formed, then they go look for a company to buy. If they don't buy a company within a certain period of time, then the SPAC can wind up.
So let me feed that back to you. You say that we have kind of an unknown quantity out here. You can invest in it, and then they're going to take their money and they're going to invest in a number of companies, or maybe is it specifically for a company such as Lordstown Motors?
It's typically specifically for a company like Lordstown Motors.
But you don't know what it's going to be before you invest in it.
Right. But the average individual doesn't have the opportunity to get in a SPAC during its formation, and that's a key point. It's normally a group of hedge funds and private equity people that are setting this up. It all sounds well and good to that point, but here's where the SPACs start to get ugly, in my opinion. Once that SPAC decides on a company they want to acquire, then the original investors, if they don't like the deal, are able to get out with their money back plus a specified rate of return. Mm-hmm. If they do like the deal, then they stay in the deal, and what's happening in most cases, once they provide that acquisition, they're turning around and getting right back out and making an enormous profit. And that's when the average investor gets to come in and buy shares of this SPAC is now a publicly traded company. Okay. The problem's becoming is the average return for an investor, not the original formation partners, but the average investor that gets into these transactions is an average loss of 35%. And the average gain for the formation investors is 393%. Mm-hmm. So it looks a little bit of a rigged transaction to me. Yeah. So that's why all of a sudden everybody's suing these SPACs, and specifically that's why all these lawsuits are coming at Lordstown Motors. It's not necessarily that they're coming at Lordstown Motors. They're coming out to the people that formed the SPAC, whipped up all the demand, drove the price up, got out, and left everybody else kind of holding the bag for now.
Yeah, just to feed that back to you, you're saying that the people that are in the formation, they decide to run for the exits, and they sell their shares, and they get the monies, and then people come into it. There's nothing left.
Well, it gets uglier than that, Dan. The actual company that formed the SPAC is able to take a commission. Are you ready for this? Of 25% of the value of the SPAC.
Wow. Geez. Is this something that was formed with the blessing of the federal government?
It was, but nobody really ever expected it to go this way. So I think trust me, this has the attention of the regulators for the way this is playing out. And there is significant scrutiny going on with these SPACs. And I think a lot of these lawsuits that are pending, there's merit to what they've done. And in terms of filing these lawsuits against these SPACs.
Yeah. So, again, this does not bode well for Lordstown Motors because in addition to trying to build a car, they're going to have to fight these lawsuits. Are they in the middle of this now because they signed on to this SPAC?
Well, now that they're a publicly traded company, it becomes their albatross, too. Even though and the folks at Lordstown Motors weren't the ones that formed the SPAC. So that's important to make sure that there's a distinction. Somebody else formed this SPAC and offered to acquire them. But the dominoes then fell, and that's why they're involved in this process right now. And to your point, they have to deal with it, even though and to your point, they still have to try to figure out, get this car built. But, when a company goes from not making any money to being worth $1.5 billion, and everybody was getting on board and buying the stock, you just got to watch that and be careful of that. We've talked about that before. That I scratched my head of how a company that doesn't even have a product yet to sell could be worth $1.5 billion.
So did Lordstown Motors capitalize their company through this SPAC? Was this just one of the ways that they did it?
Yeah, that's the main reason where they got their capital to do it. So, hopefully this is one of those SPACs that works out, and hopefully Lordstown Motors continues and the Endurance truck becomes a producible vehicle, and they get to hit the sales volume that they're projecting. And if all of that plays out in time, people will have the opportunity to reap the rewards of an increasing stock price. But, I think now everybody's feet are back on the ground on saying, okay, there's still a lot of competition. There's a lot of other electric trucks coming out. They got to get to the market sooner rather than later. Otherwise, they're going to get lost in the crowd trying to get this product to market. And that's another significant headwind that they have.
I mean, I haven't watched the amount of money that they have in capital as closely as you have, but you're saying it's close to $1.5 billion, and they went from a company that had to borrow $20 million from General Motors to buy the plant. Is that pretty much the story?
That was their market value at one point. Now the SPAC through, I don't know the exact numbers off the top of my head, but I think it was around $500 million to do this, to build this truck. But they also loaned them money on top of it. And the reason they loaned them money is many times that SPAC, the people that got out and they gave their money back, they didn't have enough money, so they actually had to turn around and create a loan situation so that they can finish funding the transaction. So
now, how about
that adds another element of risk to the portfolio.
We always laugh about our friend Denny from Rock Creek, who loves their stock, and he saw that he bought it for $1 or $2, and it went up to $40. So there were people that were not involved in the SPAC, also, right? People that just simply bought the stock.
Right.
Okay.
Right. So there's a lot of people in the stock in the 20s, and it's sub $10 right now, and I think it's starting to be. People are starting to look at it with more of a clear picture of what the headwinds are ahead of them. And again, like I said, giving Lordstown Motors all due credit, they're still building a product. We're hoping this product materializes in the fall, like they're planning, saying they begin their production. Yeah. But it's not, this conversation isn't about Lordstown Motors. It's really about the structure of SPACs and what they're doing and how people are getting involved in these, and the money people are losing by not being careful.
Yeah. Would Lordstown Motors intentionally have to have agreed to have SPAC fund them? Did they? I mean, or is this something that they can be like a hostile takeover? Would Steve Burns have been part and parcel to this SPAC?
When they did it, SPACs weren't. When they did it, it was like the next way of financing IPOs, if you will. So when they decided to do it, all of these issues that have been coming out with SPACs have come out since. So at the time, it seemed like a prudent decision. It was a much easier way to raise capital, because one of the allures, if you're an IPO, initial public offering, the traditional route of becoming and getting financing is quite expensive. One of the appeals to the SPAC is it's a much, much less expensive way to get your capital, because you're getting it all at once. You're getting it from a company that's already running. So on the surface, the SPACs provide a good value. The problems become is how the SPAC's been getting gamed, in my opinion.
Yeah, you got it. Interesting. I'm thinking, I followed Elon Musk and how he had built the Tesla. One thing about Musk, he had a lot of his own money, so he put a lot of his own money in, and he was able to raise money, and then, of course, the product just took off. But the only saving grace here would be if the Endurance comes out and sells well, right?
That's right. Right. Yeah. They got to deliver.
Yeah, you got it. Hey, well, thanks for the information. It doesn't sound too good, but if you're looking for a good financial advisor, a guy that stays on top of things, he's Leo Daprile. I've been through his FIT meetings, and describe that FIT meeting a little bit, Leo, for those out there that are hearing us for the first time.
And this is a great opportunity, whether it be me or, as you mentioned earlier with Sam, this is an opportunity for us to get to know each other. We talk about what our approach to financial planning is. We'll talk about how we get paid. We talk about how we work. We talk about goals. We do some goal planning with you. And then we decide whether or not we're a fit for each other. And we don't make that decision that day. We don't look at investment statements. We don't do all that other stuff in that first meeting. It's just let's take 45 minutes, get to know each other, and then we decide we're going to talk 2 days later. That way people have no pressure. They can go home. They can think about it, talk about it, make sure we're a fit for each other. Because this is when you do true financial planning the way we do it, it becomes a very personal relationship. And we got to make sure everybody's lined up and marching in the same direction. If we're really going to collaborate and do the job you want, we sure just got to make sure we're right for each other.
Excellent. All right. And if you want to find Leo, he's going to be on Star Center Drive in Canfield. If you forget, simply search Jim Young. All the information is there. You may talk to his son, Stephen, or Leo is in the insurance business, Leo Jr. But Leo Sr. is a guy that sits down with you and makes sure that everything works out well. And we'll guide you through all this. Their number is 533-7941. Leo, give your email if people want to write to you, and I'll let you go.
They can email me at leo@jemyoung.com.
All right. Until next week, Leo, thank you very much.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.